Thing. You guys are not saying anything. Okay, thank you. Thank you very much. Thank you. Thank you. Okay. Ladies and gentlemen, this is Nesbet. I'm here today hosting again your webinar. And I believe we've been like 2 weeks now running these webinars. I hope they are very productive to you. Okay, so like I said, today we are going to talk about this pair. I think we just browsed last week about it. And we say that we're expecting some levels, and actually the market is doing exactly what we actually anticipated. But today we are going to start from scratch together. So what we do is we start from the monthly. We're going to go to the monthly time frame and see what you can see from the monthly. So this is the monthly time frame. Okay. So as you can see now, the market actually it has been. Let me try to zoom it so that you guys can see a bit. Okay, this part, yeah, but it's fine. I hope you can see. Okay, so as you can see, this market since 1968, they've been trending, and then they came here, then they came down, they came back again. There is that point, and then they came down. Okay, great. So what we do now, we want to identify the trend. So like I said before, the first thing that you have to understand, is the levels of the market. So you have got this lowest part. This is your lowest part, and you have this highest part. This is the highest part. So this is what we call the lower, and the higher. Okay, there we go. But I don't usually use this, but you just have to know that that's how fast you know. So now you can see that, okay, you can determine, let me just put it, and then you can determine that you are in a range. So this is the range that you are in. So everything that is happening here, it's happening in this range. Okay. Oh, great. And then what happened now, the next thing that you identify is before you do anything, you identify the trend. So we want to identify the trend. So I say to you, how do you draw the trend? The trend, you join the first 2 points. So in this case, we have got this point and that point. This is our trend. So let's make it yellow. Okay, great. So this is our major trend. So in this case, it's something like from that point to that point. So it ends up being sort of like a triangle, or I don't know, whatever name that you can give it. But the reason why I chose this point, not that point, is because this is my high, and then this is my first bounce back, and then to that point, and then to this point. So like I say, the trend line is always the first 2 points, 1, 2, 1, 2. So and then the rest is a ray. What I'm saying? Okay. So by doing that, now we observe that, oh, so it was a previous impulse. So this was the previous impulse, and then the market corrected 1, 2, 3. So remember, a correction, we said it's a 3-wave, whereby it's what we said it's a 3-wave, which is an ABC, and then to go out to give you the correction. Okay. So in this case, what we realized, okay, we can see that we have got a WXY. We've got the WXY, a double zigzag. So what we can do is say, okay, in this case, this is our X movement. This is where the wave started, the correction started, and then we put our W there, then we got our X, and then we got our Y. So in this case now, it can represent either wave 2, or wave 4, or wave C, or wave X. So I'm not going to label all those names, but this previous leg, it can be wave 1, wave 3, or wave 5. You get my point? Because it's an impulse. So then this is a correction. So the market all this time is in a correction. This is a correction on a bigger time frame. So guys, if you're getting lost, let me know. I don't want people to get lost, especially when we're starting. So this is what I saw on the monthly time frame. Okay. So then after completing my Y, what did these guys do? They came and then they made a breakout. Okay, it's very clear now. So let me try. Now let's deal with this part. We're gonna deal with this part. This is the part that we're going to deal with now. Let me try to show a bit. Okay, I just want it to be a little bit more clear because what we're going to talk about, it needs clarity. So we realize that this is the Y part, this is the end. So remember, like I said, with waves, that the market always respects its highs and lows. And also there are principles of pilot waves that we follow. We don't just do things. There are principles that we follow. Okay. So in this case, what is it that is guiding us? We can see that also. Before I go any further, just by looking, by observing, I can see that, okay, the market actually respected this level. Can you see that? So it actually respected this level. They respected this one. So I call them zones. So that touch and that touch. So they respected this one. They never broke below this one. So this touch, okay, and that touch. Oh wow, that's great. So let's use yellow here. I prefer yellow for my main trend. Okay. So in this in mind, and also that you can see this as an impulse, and then there's a bit of a correction here, and then now you have to measure this part now. So with this in mind, this is what happened there. So with my Fibonacci 2 and my Fibonacci levels, they will actually give you the targets. Like you can see, this is wave 1 and wave 2, and then they'll give you a wave 3 projection target. So which means my take profit is almost time. Yes, they hit my take profit last month. This is a monthly time frame, ladies and gentlemen, don't forget. So meaning to say they hit my take profit last month. Okay, so what are they doing now? In mind, I know that they have to correct for another wave. So with this, we're going to use broken lines again. So I've got 3 take profit targets. I have 1, 2, 3. So all of them, they hit them. The first one, they hit it here, and then the second one, they hit it here, and then the third one, that's what they came for that time. Okay, so with this in mind, I now know that, and I can freely label this as, because I will, when I'm overexcited, I will share these levels for my Fibonacci with you guys. But those who are clever, they've already got them too. So now I now call this my 3. And then whatever that happens, then we shall do 4 and 5. So this 4 and 5, let's put it aside. We shall come back to it later. So we are more concerned on this part. Okay. So now this I call it my 3. Why? Because they hit my target there. Okay. Awesome. Okay. So I'll come back later for this. So what happened inside here now? Let's talk about this now. So like I said to you, this is a correction. So guys, there is no magic in trading price action, and also there is nothing that which is more special. I know guys, they will tell you that this is what, but there's no magic or anything which is special in waves. I mean, in trading, you just have to know price action. So there's nothing. When I say there's nothing called harmonic patterns. There's nothing called what do you call the other things? Those things, and Steve Mauro, BTTM or BPM, something like that, or anything that you might think of. There's nothing like that in this world. They all derive those things out of this guy, out of this Mr. Price Action Trader. So I want to show you something that will surprise you. So with us, this is the correction for me to get this tool, right? But I want to show you how did we get that tool. So with that tool, you can see also it's the same sequence with this WXY there. This is how we do it. So this is how we got this one, the bigger one, the out one. We got it like that. So we're just going to change them and put it on the, okay, this is fine. We need to change the color. Let's put it on white. So we've got this WXY. And this, it gave me my 2. And this correction now, I want you to realize something. It was deep. It came in the, what I call the stop and level. This is the stop and zone. That's where they came in. Normally, they retrace in this zone. So they normally retrace in this zone. That's why you see here, they know that people, they know, okay, the 61.8, this is the most important zone. That's why they gave you this fake engulfer, and then the following thing, they came down again to watch, to hunt for stop losses. So when they get stop losses here, now you think, this is invalidated, and then they'll go their way. So this is what happened here. So now we've confirmed with our Fibonacci. I mean, yes, we don't need it anymore. And also we got our target there. So let me just put it as a zone. I'm gonna take this high, this one, and then I will come into. So it's a zone. I'll just come above B. So this is the zone. Now we get a zone for my 3. So in that in mind, so what happened? How did you get this 3? Remember, okay, before I go, I want to talk about this correction. Let me just zoom in so that you can see exactly what I want to talk about here. So what happened here now is that how do you get these harmonic patterns? These guys, they talk about harmonic patterns. So it's a matter of trading after correction, trading an impulse after correction. So one of them will come and say A, B, C, D, E. Yeah, how do they do it? Yeah, they have A, B, C, D. They say A, B, C, D. Then they go, they're going out. But it's, this is an X leg because this was an impulsive leg. So you call it an X leg, and then we've got an A leg here. And then we've got, sorry, that's not what I wanted to do. I don't want to use this. I want to use this. Where is it? The ABC. So we've got an X leg there. Then we've got a B leg. Sorry. I'm drawing it manual. So how do you do it? It's the X, A, B, C, D. So this is how we get this guy. But in this case now, as you can see, so when they will name this X, and then A, B, C, D, and then that's how they get this. They want this move, this correction. This, remember I said to you, a correction, it's a 3-wave, right? Meaning to say, we have 3 waves. You've got 1, 2, 3. That's a correction. This is the part that they measure, and they know these levels. That okay, that's why they'll give you take profits on 61.8% and 78.6. They know these are the levels that we're targeting at. But you can't call this X because this, like, you can't call this A because this is an impulse. It's an impulse, and then this is a correction. Then you get another impulse. So that's how these things are formed. That's what happens. I don't know if you got me, but if you didn't get me, please write down any questions that you might think you have in future, and then we'll talk about them. So from there now, we want to project for wave 3. So normally there's what we call a Fibonacci expansion. Do I have it here? Okay, trend-based Fib expansion. This one is new. Let me see how this one works. So with an expansion tool, you measure from there to that highest point. Okay, the same thing, and then you come to this lowest point. Okay, so how does it work? So with an expansion tool, okay, it gives me, I think we need to edit this one. Okay. These are the levels there. We don't care about them. We need to edit so that it can give us the 61.8, this area. But anyway, it gives you this pro. So this is the one that you must also, this is your first target. The reason why it's giving you this, let me show you. Actually, I'm now doing sort of like more of mentorship here. But anyway, this, so it is giving you this in terms of it's measuring this 1, 2, 3, 4, 5 to give you this point. So every time it gives you this target, it's giving you in that manner, but that's not the case. So the case is we use this guy. Okay, we use this guy, and then we take him from that part to that part. Can you see that? And then it gives you this zone. That's your target. You've got target 1, 2, 3. You're out. Okay, so and then that's how easy I made it. So I combined the expansion and the retracement to be one. Anyway, so we got your two here, and then now we put 1, 2 correction. So it's another impulse. Which one? This guy. So we've got X, we've got 1, 2, 3, 4, 5. Okay. And then we've got 3. And then we have 4. Then we have 5, 3. Sorry guys, just something that came in my mind. And then we have 5 there. And then now we choose the color. We're gonna use red. And then there we go, something like that. Let's delete this one. Okay. So we have this 4, and then we have this 3, and then we have this 2. So by doing this now, now we have got the full 1, 2, 3, 4, 5 to give us this big 3, this 3, the 3 that we got there. Okay, can you see that? Okay. Sorry guys, this thing you just need to be a little bit patient because I want you guys to see this candlestick and what is happening in second. So by doing that now we have got we have got 1, 2, 3. There's our 3 there. So then from these 3 we've got an A, B, C correction for 4, and then now we're going for 5. So in this case we've got this correction. So we've got X here, and then we've got A, B, C to give us this 4. Great, awesome. Can you see that? So now, after that, let's put a red color there. Okay, so this is our 4. So our 4 was constructed in this way. We've got this formation there. I'm gonna change the color as well. Let's use white, and then we've got this leg there. Okay, that's how we got this 4. So my 4 was there. Okay, so after getting this 4, now we want to check for this 5. So in other way, what am I saying? I'm saying that what are we expecting? We are expecting something like this. So since now we've got 1, 2, 3, and then we're still constructing this 3 in this case. So what are we doing? We're expecting a correction for 4 in future. Okay. So if we're going to expect a correction for 4 in future, we'll measure it from this point to that point. So what are we saying? We are saying our correction is going to come in the zone of 38.2, which is here. Okay, let me leave this guy here. And then let's remove this one. Since we're done with this one, we're coming to the zone of 38.2%. Right, this zone. Okay, so that's our future retracement. Anyway, so this is what we're expecting in the near future. But now let's go to, let me put this 4 here. So we say 4 in this zone. Now let's go to a lower time frame. We're gonna go to the weekly time frame now. So and check what are we seeing on the weekly time frame. Awesome. So on the weekly time frame, we can see that okay, this market it has been going up. Can you see that? They've been going up. Okay. And let me try to zoom in. Yeah. So we can see that okay, they tried to attempt to test, and then but they kept on going up. But in them going up, there is actually what we call what? A trend. This is a trend. These guys have been trending. So this is the 5. So our 5 is in what? It's in an impulsive way. It's in an impulsive way. Something like that. You see, like that. So it's in an impulsive way. Okay. Let's go to daily because I want this to be more clear. Okay, so like we said, this wasn't, it was just trending up. There was no retracement here. It was a perfect trend. So we call it a motive trend. But now, check, I want you to realize something. At this point to that point, this way now it's ending, right? This trend. Can you see that? And then also it came from that point. We can take it from here to there, but something from here to there. But I would love to take it from this point to that point. So we're gonna take it from here, from this point, because this is where now the ending diagonal started. Okay, something like this. So now we saw that, okay, here there was a breakout of the trend, and then there's a retest which is happening. This is what we're currently observing here. Okay, something like this. We have something like this. Can you see that? There is a breakout, and then this is sort of like a retest. Okay, but in that, so we can now call this is our A. Let's go to H4 now. Okay, on H4 now, this is what we're seeing. Like I said to you, this is our A. This is how our A was formed here. Just put the line. Yeah. Okay, we have this. So this is our A leg. Now we're constructing what? 4. So what are we expecting? We're expecting a retracement from this impulse to that low. So what are we expecting? We're expecting now, can you see the market is in the zone of 78.6%. We are in the zone now. Okay. So we are expecting any time from this zone for them to what? To retrace. So they will form A and B, and then they'll come for C. So the easiest way for you to trade this, if they are to follow this, the easiest way is to make sure that A is equals to C. So you're going to trade A equals to C. So what do I mean that? I'm saying that from that point to that point, and then now your take profit target, it will be this one. That's your first take profit target. To be this level. So you have got something like this to be your take profit target. So in this case, now you've got your A equals to C leg. So currently, this is what I'm expecting from my side. So I'm expecting this market to come in for A, B, C to give me the bigger W or the bigger A, then another correction, and then they'll form the last A, B, C until they get to this point. This is the final point. So from this point, we might see them. Let me show you the path. Where's the path? So we might have something like this to that point. And then from that point, we get a retracement of maybe in this point. Sorry. I think I made a mistake because I wanted to show you the bigger one. Let me show you the smaller one first. So the smaller one is from that point to that point, and then to that point, and then to that point. All right. Okay. then to that point. That's the first part, right? And then the second part now, this becomes the bigger part. So the bigger part becomes something like from that point to that point, and then a retracement of somewhere around there, and then to down there to the last point, something like this. So this becomes a bigger part. So this, I'm saying this is A, B, C to give you A, then they'll correct for B, then they'll now go again until they get to that part. Okay, I hope you got the part that you are looking forward to get in the near future. Okay. Then let's zoom in now and start seeing what's happening. So right now we are going to pay attention for this level. In this level, we're waiting for the market to react and see how they're gonna react in this level. So the best way that you do is to use the Fibonacci. You're gonna use the Fibonacci like from that point to that point and then there. Okay, so in this area. So it's either this week or next week, we're expecting that that to happen, that retracement to happen. Anyway, so yes, this is exactly what we're expecting, and yeah, you can as well go on 1 hour or you can keep it on H4. It's up to you. So I'm going to open for question and answers. I think I'm done for today. For those who might have questions, for those who might have what they want to contribute as well, this is time for you to talk. So yes, we can unmute ourselves, ladies and gentlemen. Yeah, let's unmute ourselves and let's talk. Let's discuss. Any questions, any contributions, anything that you feel you wanna say? Peter, I see you. Yeah, yeah.
Yeah, I'm here.
Yes, let's talk, my man.
I wanted to ask you, by the way, you know, like this week, I've been unable to trade this week and last week because the markets were really ranging. But I noticed some of my friends were able to trade. They're like doing like something like, it's more like fractal trading. Like you look for the same kind of setup, but you do it in a much lower time frame.
Yeah, yeah.
So
yeah.
I don't know if you're like familiar with those kinds of trades. How do they pull it off? Because you know, like most of these guys who do this type of trades, they tend to use a lot of pending orders. And like what I've noticed about their style is that it involves a lot of smart money concepts or supply and demand. Like they use those demand zones to pick those trades up.
Okay, so from what you're saying, it depends with the type of a trader you are. Because yes, remember, even in trading, some they make money, some they lose money. When you lose, someone is making money. So it also depends with your strategy. So hence I'm always saying that at some point, it's not a matter of trading every day. It's a matter of understanding your strategy, you see. So like what we're saying, yes, in your case, I believe you are more of like a swing trader, right? You see, what you're doing is you have to wait for such setups, like where your estimation is. So what actually kills us as traders, and also what makes us amateur traders, is because of anxiety. You don't have that view or that patience to wait, like to go even 2 weeks without trading, waiting for your setup. You just want to trade. You end up like taking the wrong entries or the wrong trade because you want to trade. So yes, the market, even with this strategy, you can break it down until to even 1 minute time frame. It depends with what kind of a trader you are exactly, and you know, so it's very possible yes to trade very lower time frame.
Okay.
Yeah. Yes. And is there anyone else who has got something to ask?
Nisbet, just have one question for you, right?
Okay, who is
With
this, by the way?
regards to it's Melus.
Melus, I can hear your voice. Okay, yes, Melus.
Yeah, no problem, man. No, I just wanted to find out what special tool do you use to get like fundamental reports, specifically with like your dollar index. What type of tools do you get like confirmation with your fundamentals? What's really going to happen with the dollar index for that particular day or week?
Okay, so me, what I usually do, I actually pay attention to Bloomberg. So, and also I use what you call investing.com and my FX book. So with that, and also now I do a lot of research on the pairs, that I'm trading. So what I can say on fundamentals now, it's a matter of researching. It's a matter of researching. There's no tool that you can basically use, but the only tool that you can, if you are a dollar trader or any type of a trader, is this tool that you have to use. So as you can see here also, if I'm to show you my GJ last week, I was expecting my GJ to not this one, man, GBP. Remember, I was expecting it to turn around in this area. This is my prediction. Remember, with trading, it's a game of what? Of probabilities.
For sure.
So yes, it's not a matter of like you have to be accurate 100%. No, it's a matter of probabilities. Your probability. So with me, myself, I'm like, no, these guys actually they have to turn around in this area. Saying that, okay, like I said, they usually respect these levels. So they know that traders, you actually expect these levels. And then they came here. Can you see that when they came here and they went up? This is what was during CPA. Remember that time when we bought this first like ABC. So this was still a correction.
Yeah.
But in mind, I thought like this is going to 1, 2, and then this is a 3, and then this can be a 4. But they invalidated that 4. So in that invalidation, and I'm like, okay, so maybe they're coming back into this area, of which they did that, and then they went. And then I went in nearby this one. But then they're like, okay, we're going to come in invalidate here. So a lot of people yesterday, they lost money because of this setup. This was a tricky setup, to be honest. And then from there, but me, my maximum level was this one. Because as you can see with corrections now, mostly they do what we call the WXY, and then they come in the 78.6% zone, of which they just broke it now. But I might not sure if they're gonna break it or this can be a false breakout or a spike. So this will depend by the end of the day, like the close of today, how they're gonna close today with this candlestick. And also currently they are in that zone that I said to you. It's called a stop hand zone. This is the dangerous zone. So this is where they come and wipe out all the stop losses, and then they go their direction. So that's what actually mostly happening.
Oh, cool.
Because currently, as you can see, we have a confluence. This is what we call confluence. A confluence is whereby a minimum of 2 confirmations or strategies that they'll give you a signal. So a confluence is whereby now we have got a trend, like in the basic trading. This is a breakout and a retest, right? That's the normal, that's the basic way. We know this, okay, whenever the market breaks out, it's gonna come for a retest and then it will go down. But with us, okay, this is my first confirmation, and then my second confirmation is this zone. I play around with the Fibonacci, and then I know, okay, in that zone, what am I expecting in that zone? So in this zone, I'm expecting them to come in this one. So now we have a breakout from the trend line, and then we have also this zone of 78.6. Can you see now it has got more power now? So the only thing that I'm waiting for now is what? It's candlestick formation. So now I'm going to watch my candlesticks on 1 hour. So now I'm watching my candlesticks on 1 hour. Like I need an engulfer for me to give me a confirmation to go into a trade, or else I'll also need a divergence, of which they are forming it right now, the divergence. Can you see that from this part to that part, it's almost a little bit lower or equal, but this part to that part, they are going up. So currently, now I have 3. So currently, I'm waiting for candlestick formation. That will be my 4th one. And then from there, I can shoot my gun.
For sure.
But the problem now, like I said earlier, what kills us is anxiety and lack of patience. Anyway, any more questions?
But I wanted to say something.
Yeah.
You see, the reason why I wanted to know how to trade on this lower time frames. Like it's because usually my style is more like intraday.
Okay.
But I usually depend on swing setup. So like it will come off like it will be like the setup is forming on the daily or weekly on the weekly key level, and I pick it from there. But I usually tend to scalp it throughout the day till the time when it wants to start doing the retracement. Then I now get off the trade and let it then do it the next day again. That's how I usually trade. So like last year, around November, it was around November or late October, I took a challenge for my Forex fund. And when I entered that challenge, like my strategy was ready, but like when I was entering that challenge, the banks were closing for the holidays. So what happened is that it just ranged. And just like that, I lost that challenge. So like I'm thinking in terms of like November, when that thing happens again, I need to prepare with a strategy that can trade in those lower time frames and bring in the money during that time also.
Okay, because of time, what I need you to do is let's continue this discussion. You can come to my inbox and then we can have a chat with this discussion, guys. Also, if has got a question, you're welcome. You're more than welcome to come to my inbox and then we talk about it.
Yeah, okay.
Okay. Otherwise, because for the sake of time, sorry guys, you can come to my inbox and then see you next week on Wednesday again. Hello?
Yeah.
Okay, great. Thank you very much. Thank you very much for attending. You have a lovely weekend. Cheers, bye.
You too.